Hi traders, it's Chris here. Hope you're having a wonderful day. This is a coaching video for people who want to trade gold successfully using the 15-minute chart, which has been developed over a number of years. My name's Chris. I'm the head trader at thetradingmentors.com, and many students have used this over the last couple of years very successfully. In actual fact, they've disappeared into the distance because they're now trading it, and it can be used on, they've successfully used it on the Dow, on the DAX, on the S&P 500, but for me it works really well on gold. So I'm going to show you how to implement the setups, how to compound using a delta 5, and so on. So this is what you get, and if you don't want to set up the charts yourself, that's fine. I'll send you the gold signals as well. So this is how it works. So it's got 82% success rate, sometimes more. 15-minute chart only. I'll give you the stops and the targets, which are very, very strict. You have to be patient, you have to be disciplined, and you have to follow the rules. Okay, now if you want the signals, there's a 7-day free trial, and then it's £50 a month. You will easily make a lot more money than that. I'm talking about hundreds of dollars a day, even on a small account. So if you're trading $1,000, then you will make 10% every time there's a successful trade or more. So I'm going to show you that. The beauty of this system is that I often use it on my iPhone. It's perfectly developed for the iPhone actually, and actually looks a lot better on the phone than it does on the MT4 charts here. You don't need TradingView. I will be going into TradingView in the next few minutes. I love TradingView, but for this particular method is quite simple and straightforward. So let me just go over the rules. The first thing is we're looking for trading rules. We're looking for a 20 pip stop and a 50 pip target. That's it, nothing more, nothing less. Okay, and therefore you know exactly what your stop is and you know exactly what your target is, so you can just set and go. You don't have to be looking at it any longer. So the other thing, these trading rules that I go by, is the first thing is this stochastic. Now if you have the advanced pro charts with me, you've spent a lot of money on the systems, then this, you will know all the systems anyway, and you will have this. If you don't have the systems, then you don't have to have them. You can just go for the gold signals. Simple as that. Don't worry about it. So the first thing is we have a stochastic here, which is very useful for getting us to see divergence, but also we have a sell zone and we have a buy zone. And I'm going to run through this so it gives you a better flavor of what's happening. We are waiting for a move down, so we may even be trading live, I don't know. But the other thing here is the CCI, and this is a very good way of measuring divergence. So if you don't understand divergence, let me know and I'll send you my book. The divergence positive here in an oversold condition. So there's the oversold condition. There's the positive divergence. There's the price moving up above the yellow line. So rule 1, we must see divergence. We must have a swing low. And for the trigger, we must see the price moving above the yellow line. Let me show you another one. Now remember, we're not going for the big one. We're going for just 50 pips. And I'm going to talk about compounding, which is really, really important. So the risk to reward is 2.5 times every time. Fixed rules. And so here we have a negative divergence on the RSI this time, which is fantastic, even stronger. And we also have negative divergence here. So the price is going higher, yet the divergence is negative here. So that gives us a nice 50 pips here. It often moves a lot more, but don't worry about that. It's all about having a regular system that can regularly bank money often. Okay, it's not going for the big one. We're not talking about parabolic trends here. And we're not talking about scalping either. It's really important. I don't like scalping. So this is a day trading system. You are not going to trade overnight. That's not how it works. It is a day trading system. And you are going to trade during high volume times, London Open, New York Open, etc. So that's the system, and the rules are very straightforward. So as soon as I see this going on, positive divergence, negative divergence, we now have negative divergence here. So I am waiting for the price to break down, and once it breaks down below that yellow line, I will be going short. So I've jumped now into my TradingView chart. You don't have to have TradingView chart. You don't have to have the price action charts, but if you do, it's a bonus. It's not essential, and that's really, really important. You want to make sure that you keep it as simple as possible, so that when you pick up your phone, you can open it and you can see whether there's anything potentially going to happen with the gold. So here are the trading rules at the top left. You're going to use a 20 pip stop, a 50 pip target, no more. And you're going to have, and the essential ingredients are that the stochastic, there's divergence in the market from the MT4 charts, as I've just shown you, and that the stochastic is oversold or overbought at that time. Now in the TradingView chart, we've got a little bit more information in price action. We've got the liquidity zone here. This yellow block here is where the sellers are getting ready. And we have the red block, order block as well, which indicates sellers are getting ready. Of course, it doesn't mean that they are. The price will do whatever it wants. That's the name of the game. But what we have to do is wait for a change of character. So the change of character for me is whenever the price moves down below this yellow line, as I've showed you on the MT4 chart. Now what I want to talk about now is where you start with this. So let's see what the potential is and what potential compounding can be and how it works for you. Now every one of us has got a different budget, and of course you have to work within that budget. The bigger the account size, the more money you're going to make. That's the name of the game. That's how it works. However, you can start with $1,000 quite easily. Remember, we're going to have a 20 pip stop. So quite tight, but tight enough, but wide enough to allow the price to move. And a 50 pip target. So with $1,000, your lot size is going to be zero. That should be 0.25. Let me adjust that. 0.25. Okay, so you're going to have 0.25 lot size in your position, which is $2.50. Or in other words, you're going to be risking $50 on $1,000. As long as you're comfortable with that, that's the key, because we don't have any fear, we don't have any greed in the market. It's a system where it just runs itself. The risk to reward is 2.5 times. Okay, so your target is 50 pips as opposed to 20 pips. And therefore your reward is $125. And it's pro rata, isn't it? So if you're a $10,000 account, then you can go 2.5 lots, etc. Now, the Delta 5, which most people don't know or even understand, is quite a safe way of compounding your account, but not too quickly. I don't know if you've ever done that, where you've increased the lot size, but then suddenly the market's gone against you and you wish you hadn't compounded so quickly. If that resonates with you, then I done that many years ago, 30 years ago, quite often, and learned the hard way. But this Delta 5 is really important. So you're not going to increase the lot size of $2.50 or 0.25 lots until your account is closed, very important, at above $1,500. So now all of a sudden you are using and risking money you didn't have, and you're risking the profits from the previous trades. The Delta 5 also accounts for once you get to $1,500, then you have to, you cannot increase the lot size until you achieve $2,000 and then $2,500. Makes sense? Keeps it all nice and steady. It's the trading rule which makes sense, I hope, and hopefully that will make sense for you. Now, the other thing you don't want to be doing is trading just before the news, because you're going to get tripped out. That's perfectly normal. So wait until London Open after 8 a.m, let's say, for instance, is a good idea, although it does happen often. It often happens during an early morning session and late in the afternoon New York time. So it can happen anytime, and I will let you know if it does. Because it's on my phone, I can actually throw out that into the gold signals room and let you know when, first of all, it will say get ready. That doesn't mean to say it's imminent any moment. It just means get ready. We've got divergence, for instance. So in this example here, we've got divergence. I put out a message to say get ready, but the price has not given way or changed character yet. Okay, so now once you get to increase your lot size, then of course it gets very exciting, doesn't it? Because if you've got a system that banks regular profits often, and that it does happen often, if you look at this situation here, as I showed you earlier, negative divergence 50 pips, positive divergence 50 pips. There's also one back there as well. It happens quite a lot. So you're going to have possibly 5 or 6 trades a week, and with an 82% success rate, then of course you're going to be in the money quite often. $125 a day is quite common. So don't forget to put in the sell zones here. The sell zone is up here, the sell zone is here, and the buy zone is here. Hopefully you enjoyed that. Any questions, please let me know. I'm here to support you throughout your journey. I want you to be successful. I want you to disappear into the distance. I don't want you lingering around anymore. I want you to retire. And of course, don't we all? So at the end of the day, I love coaching anyway. But if you stick around, I'm very happy. If you become ultimately successful, I'm happy as well. Have a great day.